Paul's joining us here today. And Paul, thank you for coming on the show this morning and starting the week off with us. I want to talk a little bit about the 1 million barrel per day increase that OPEC announced after the meeting. Is this going to be enough to keep up with the sanctions and increased demand?
No, it doesn't seem to be. I mean, it was certainly much less than what many of the traders were anticipating, and part of the reason why we got a 4% pop in the markets on Friday, and we've got a little bit of firmness coming in this morning, and we've got additional backwardation in the markets. So you've got a lot of things going on here that argue for higher energy prices in the short run. The key player, I think, to take a look at is Saudi Arabia. So if there's any cheating that goes on, the big beneficiary actually will be Saudi Arabia, because they're the ones who are going to be able to put a lot of crude back into the marketplace. The U.S., I think, is going to be constrained by the pipelines. The infrastructure is not really there yet to handle all the production that we have, especially coming out of the upper Midwest and upper West. So we've got some issues, and I think we've got some higher energy prices to deal with in the weeks ahead.
You know, Paul, I'm curious, we're hearing about these production increases. You mentioned that the Saudis are going to be able to. How long till they actually can get some of that increased production online?
You know, I think they're pretty well ready at this point. I mean, if you take a look at capacity and capability, Saudi Arabia, I think, can do it pretty quickly. It's a matter of, do they want to? You know, they're kind of stuck between a rock and a hard place in the fact that they really do want higher energy prices. It will help their overall economy, and they would really like to generate a lot more revenue, which means additional production, which will push energy prices lower. So, again, they're trying to play the middle ground here, and I think they were pretty happy with the overall sanctions. Russia came in line, and it looks as though, certainly from the last meeting to this, they did a pretty good job of actually sticking to what they all said they were going to do. And so there's a little bit more strength with OPEC now than we've seen in a while.
Yeah.
And I think that's been supportive of energy prices here.
Yeah, a little bit more influential. And many are actually joking that this is OPEC plus one. Paul, talk to us about the role that Russia had in this decision process.
Yeah, Russia has actually been, again, their economy has been struggling. They are in dire need of additional revenues. They are a big oil producer. They do have problems in trying to get the stuff out of the ground. They have a lot there. So they would like to see much higher prices. But again, they would also like to be a producer, a major producer as well. So they're playing the game along with OPEC. And I think OPEC is now starting to, and we'll see how this develops over the next 6 months or so, but starting to play the long game as opposed to meeting to meeting. So I think they're looking to try to shake out some of the smaller players. And again, that's why I said the last time that they met, they've all stuck to their guns.
Yeah.
And kept their production levels pretty close to where they were. So again, something new out of OPEC that we haven't seen for quite some time.
Yeah, how about the role that the crude responding more closely to dollar-type price activity? Because in anticipation of OPEC, it seemed like all of that kind of broke down for a little while.
It did, and and I think really the dollar has been pressuring energy prices. The dollar's been very strong over the last 6 weeks or so, and that's kind of kept the lid on energy prices. We've seen those come down between the dollar and energy. Certainly energy is priced in dollars, and a higher dollar is not going to be beneficial to the energy market.
All right, traders, that's Paul Nolte. He's joining us from Kingsview Asset Management. Paul, always a pleasure. Way to get us started off right in terms of what we should look at here this week.